All right, lots of corporate voices lined up, so let's get moving on then. And joining in is Rajesh Jejurikar, ED and CFO AFS at M&M, here to talk about the numbers as well as the road ahead, if I might say, quite literally. Thank you so much for taking time out. I just want to begin then by talking about the tractor industry, because you have indicated for FY24 that there will be a 5 to 6% decline. So for Q4, does that mean then, if we extrapolated, a 10% drop?
Firstly, thanks for having me on the show, and we're very pleased with our results. So just to recap, at a consolidated level, M&M had a 15% growth in the top line and a PAT growth of 34%. And when we look at M&M standalone, we had a PAT growth of 61%. So we're actually quite happy with the results. The auto business, of course, done very well. The tractor business, as you rightly said, is going through an industry decline. And we have seen, on a cumulative basis this year, about a 4% reduction in the industries. We've gained some market share, so our reduction has been lower at 2%. Our current estimation for the full year is that the industry would stay in negative territory and be about -5. And you rightly calculated, and hence that means Q4 would be roughly a 10% negative growth for the industry.
Right. Rajesh, hi, morning. From channel
Morning.
checks and also speaking to other industry participants, what we understand is that there have been early signs of a demand slowdown clearly across rural India. Also recently, one of the channel checks indicated that an 18 to 20% month-on-month fall is what you're seeing in retail registrations in the month of February alone. What are you sensing here? And when do you actually see some sort of a pickup coming in?
Are you talking about now just specifically the tractors?
No, yes, I'm just talking specifically about the tractors.
Yeah. So we don't think the retail shortfall, or our evidence is the retail shortfall or the negative growth is not as much as what you're saying. One of the reasons why there is going to be -10% growth, negative growth in this quarter, is because last year there was a Navratra in March and this year there isn't. So it's a season shift from March to April from that standpoint. So that is one of the reasons why March is going to go into big negative territory, and hence the quarter is going to see -10%. So that some of that is a seasonal shift. Some of this has to do with the rainfall not being as good, lower than the LP, about -5% overall. Reservoir levels not being good. But it's also the festival movement which is affecting Q4.
And what about passenger vehicles? What's the calendar year looking like? Because there too, in the month of February, we understand there's been a bit of a dip, right, in registrations?
February is, of course, too early to call. I mean, just a few days in, so I don't think we can comment on February. Our SUV portfolio in the quarter and through the year has grown about 30%. So it's very healthy growth. And if you were to connect that back with retail offtake or Vahan as its a source of measurement these days, our billing numbers and our market share in Vahan and our market share as per billing data of SIAM is about the same. So it indicates that there is really no significant stock buildup on the auto side.
Wanted to understand a little bit more about the EV strategy, because your competitor, for instance, the Tata Group, has announced some price cuts of up to 1.2 lakh. Does this mean that EVs are now becoming a little bit more cost competitive? Will you be following suit?
We actually upgraded our XUV 400 recently in early January with better interiors and better technology features. And we had already corrected our price when we did that downward. So some of our competitor moves may be responding potentially to what we already did in early January.
Okay, fair enough.
So
what about
we will not be responding hence to specifically answer your question.
Okay, fair enough. Won't probe there, but wondering if with respect to the Red Sea issue, has there been any supply chain or container availability issue? Have costs increased?
Yeah, so there are three impacts that the Red Sea issue can potentially have. The first is increase in cost. That's not very significant. We're also covered by contract, so that's not a major threat to us. The second is lead time for our export products. So we've had some issues of connecting our new Oja tractors to US, which is getting launched about now in the North American market. So there have been a delay. There has been delay of 3 to 4 weeks, but I think that's a cycle change. So we're adjusting to that, and that's kind of behind us for now. The third, to your specific question, is the supply chain for domestic. We have adequately built inventory right now, so we are covered. There's no disruption supply chain because of Red Sea at the moment. That being said, we can't, if situation worsens, something may happen. But right now, we believe we have de-risked ourselves and we are covered.
Rajesh, let's talk about what the year ahead is going to look like in terms of launches. I guess the most awaited one is the Thar 5-door. Tell me about what's happening on born electric vehicle as well. You already highlighted XUV 400 EV, right?
Yeah. So the born electric programs, we've spoken about 3+1, 4 products in the pipeline. They're all on schedule, testing very well. As we drive them, we get more confident and more excited about them being truly disruptive products in the market. So they are on schedule as we put out. There's no kind of change to that as things stand at the moment, and we're very excited about the readiness of that. We hope to see them in market by early 2025.
Okay, that
On
sounds...
the ICE products, we have a couple of interesting products, one of which you just spoke about, which is the new Thar. And we believe that really is going to be very, very exciting, and we'll get a very good feedback.
All right, that sure sounds exciting. But I just wanted to also understand a little bit more, given that the company has something like 15,000 crores of net cash that's likely to grow. What are the plans for this? How do you see FY25 really panning out?
Yeah, so we would share some more detail in the May call or the May post-board meeting, analyst media calls on how we are seeing the capex over the next 3 years. So that would be one of the things that we will talk about. That being said, we are looking at avenues by which we can enable our growth gems to grow, go through a quantum growth phase, and some of them may need some money. Any other kind of new investment, we would be very careful and mindful of doing. So broadly, the organization would, or the group would want to move into a phase of now saying, how do we drive growth very rapidly, but while maintaining capital allocation discipline.
Right.
You'll hear more of that over the next few months, I guess.
Sure. So Rajesh, which M&M car are you driving nowadays? Have you moved from XUV 700 to Thar?
No, I still am on XUV 700 and I'm very happy with that at the moment. So unfortunately, I can't afford too many cars, so I have one.
I'm sure you can test drive one new one every day.
I also have a XUV 300, so I have two.
Okay, great. Good speaking with you as always. Thanks for giving us,
Thank you.
that clarity
Nice
on
being with you.
when
Bye-bye.
you see actually, more importantly, the tractor sales actually pick up and what we can expect from the tractor division of M&M going forward, because that really has been the problem area.